Welcome. My name is Mary Jetton, and I'm the CEO of Tracklight, but more importantly, along with Jules Miller, who's sitting there, I'm the co-conspirator in Evolve Law. And we're very excited to have, I think it's about our 9th or 10th event here at Davis Wright Tremaine. Davis Wright Tremaine, for those of you that don't know, is a founding member and the only founding law firm member of Evolve Law. So I'm going to introduce the wonderful, in so many ways, not just with Davis Wright Tremaine, Lynn Lowaker, and she is the firm managing partner here and is going to run our panel.
Thank you. Oh. Thanks, Mary. We really are thrilled to be a founding member of Evolve Law. We're true believers in the mission of the organization and the imperative of revolutionizing the way we practice law and we deliver legal services. But it's not about us, it's about all these interesting people on the panel. So I'm going to ask them to introduce themselves with a couple of sentences, not too long, and to also let us know who their favorite lawyer is. Dead, alive, fictional, imaginary friend, whatever. So Jake, why don't you take it away?
Sure. Hey everyone, I'm Jake Heller. I'm the CEO of Casetext. We are a legal research company where you can read essentially the entire law you need to research that has been annotated by some of the best law firms and lawyers in the world, including Davis Wright Tremaine. So favorite lawyer, I have many, but recently it's Saul from Better Call Saul, or Jimmy. Yeah, that's a fantastic show. Everybody who loves, if you loved Breaking Bad, Better Call Saul's almost better. So
Wow.
Check it out.
No, it's not.
No, it's not. It's not, but it's way better than I expected. Yeah.
Hello everyone, I'm Jules. I am co-founder of Hire and Esquire. We are a legal labor marketplace in the enterprise space specifically. We help law firms and in-house legal departments find, manage, and pay a flexible workforce of attorneys on demand. I'm also the co-founder of Evolve Law, so thank you all for coming. And I'm going to say my favorite lawyer is Judge Judy. Keeps it real. Keeps it real.
Everyone, my name is Vipin. I work for an enterprise VC firm here in New York called Workbench. We are, you guys I think would appreciate this, we are the intersection where suits work with hoodies. So we actually introduce a lot of enterprises here in New York with startups. That's kind of our mantra, it's our claim to fame here. My favorite lawyer, of course, has to be Harvey Specter.
Hey everyone, my name is Nick Poulos, also with a enterprise-focused early-stage VC firm here in New York, investing on both coasts. We do pretty much only enterprise SaaS, so that kind of runs the gamut from sales and marketing, security, fintech, but vertical software is a big area of focus for us, and obviously included within that is legal tech. And favorite lawyer, it's a tough question. I think the answer I want to give, I actually don't know his name, but if you guys have seen Making a Murderer, which I recently binge watched on Netflix, his two lawyers, if you've seen it, the duo, pretty inspirational. Like I literally did not think I was questioning whether that was all staged because that guy was so eloquent. It was unbelievable. Watch that show if you haven't seen it.
Hi, I'm Lorraine Pendleton. I am global director at a large global law firm, but I'm also an angel investor. And I've been fortunate to invest in two great women-led companies who happen to be legal tech and Hire and Esquire as well as Tracklight. I've been angel investing for the past 2.5 years. And my favorite lawyer is Thurgood Marshall for obvious reasons. First African-American Supreme Court justice, as well as he would argue the Brown versus Board of Ed case, which was pretty incredible. So he's my favorite attorney.
Thank you, Lorraine, for keeping it real.
Yeah. Thanks, everyone. So we're here to talk about investment in legal tech. And just before we delve into that, I'm curious, how many in the room are entrepreneurs? And how many in the room are investors? Oh, good. And how many in the room are practicing lawyers? And so, who are the others? Who are the others?
Who are you?
There, yeah. Okay.
Former practicing.
Former practicing attorneys. Okay, great. Well, to get started on that topic, let me ask the investors what kinds of legal tech companies they've invested in to date. We already heard from Lorene about what she's done, but she can elaborate a bit. Or if you haven't invested yet, what are you looking at? Lorene, do you want to start and maybe elaborate a little bit on what you've invested in?
Sure. So, I mean, Jules gave a great introduction. Hire and Squire is a on-demand legal market for attorneys. So I invested about a year and a half ago with them. When I met Jules and the other co-founder, I think because I'm a former practicing attorney, I've worked in business development for the past 12 years. I just knew immediately what they were doing was very needed. And I knew it would be a tremendous market. So for me, the legal tech companies that I invest in, is it an addressable market? Are they solving a problem that either law firms have or in-house counsel have? So that's really important to me when I'm looking at investing.
Yeah, so we actually have not made an investment in legal tech to date. Continue to actively look at the space. I think in terms of answering the question of what we would look for, I'm sure it's something that we'll talk about throughout the panel later tonight, but traditionally law firms are difficult to sell into because you kind of have a very long tail of small law firms that don't really have the budget or sophistication to be a buyer of complex software, and then the big ones, decision making and sales cycles are super slow and long, respectively. So I think that generally what I would be looking for is something that can subvert that difficulty. So it could be on the long tail side, something like practice management software, or there's been a lot of success in e-discovery because that's something that's actually consumable by long tail. On the high end, selling into really big law firms, answering that question is tough, and I don't 100% know the answer, but there's a lot of really interesting things around applying NLP to case law or contracts to extract information and make that process easier. There's a lot of interesting plays around contract management in general. And I'd say finally there are also a group that maybe doesn't as often get bucketed into legal tech but probably should be would be things like e-shares or cap shares, things that make or you could even bucket to some extent DocuSign and companies like that, and things that make the actual transaction easier and more secure.
So at Workbench, we invested in a company called Ravel. If you're not familiar with Ravel, they're a legal research and analytics platform. Ravel's kind of strong suit is that they can do a lot of data visualization around every case out there and surface up a lot of the commonalities between them. They can even predict what the judge that you're working with, predict how they're thinking based on all of the decisions that they've made in the past. And so we've been investors for the past year and a half, got to know the team very well over the past few years. There's a lot of challenges that accompany the legal tech space that we, didn't really know about until we invested in the company. But at the end of the day, Workbench we're big on data and analytics, and this was that. They were attacking a big market. There's several large incumbent players in the market, and it made sense for us in terms of like the vision that they had, the team that they were assembling, so Ravel.
Great, thanks. And for our two entrepreneurs, maybe you can tell us, Jake and Jules, how you've raised how much you've raised, if you're willing to share that with us, and from whom? Angels, institutional investors. Jake, do you want to?
Sure. So at Casetext, we've raised a total of around $9 million. And that began first with an incubator called Y Combinator. For those of you who are thinking about starting a company or are starting a company and you want to apply to Y Combinator, let me know. It's an awesome experience. After that, we raised from a variety of angels and institutional investors who invested in our seed round that happened shortly after we finished the Y Combinator program. And about a year and a half or two later, more like a year later actually, we raised a Series A from a firm called Union Square Ventures.
Cool. So we've raised about $2 million over the course of 4+ years. So maybe not the typical thing you read about in TechCrunch, but for legal tech, I think it's a little bit different raising money. You've been really successful, which is awesome. But I find that we have to build real businesses and actually sell, and we get little bits of money along the way as we succeed. So it's more incremental. So we were bootstrapped for 2 years with zero money, which was awesome. Really glad we got through that. And then we raised a $350,000 round, then a $700,000 round a year later, then another $1 million round a year later. So that's us. We've got mostly angel investors, lots of great angel groups involved, Stanford Angels and Entrepreneurs, Astia, 37 Angels, lots of awesome women. We're 2 women co-founders, so we got lots of women investors, and then a couple seed funds, including Targi Ventures, 645 Ventures, and Ulu Ventures.
Great. Well, Nick, you alluded to the challenge of the customer base for these types of companies, which I guess I represent part of that. And this is by some accounts, it's a $500 billion industry. And I know that the big banks, I mean, their annual legal spend is like $1 billion plus. It seems like there's just this huge opportunity, all this money out there. What is the opportunity from the investor's point of view, and is it sort of slow to come around? Is this the last? I mean, there's fintech, there's an ed tech panel going on someplace else in this building. That's why there was so much trouble with the security. Talk a little bit about sort of the engagement with this area and the investor community, and how you see it. Is it a real opportunity? Is it something you're still thinking about?
Look, I mean, I think it's no doubt it's a huge opportunity. I mean, there's tons of spend, and you could cut it any number of ways. Revenue of law firms, the amount of money people spend on, counsel or lawsuits or transactions even. So, where there are big markets, especially those that haven't adopted a ton of technology yet, that's naturally an opportunity. So, it's no doubt there. I think the problem I was referring to was kind of the real, big wins for startups is to win a contract with, a Fortune 50 or 100 law firm that has a ton of budget, and if they were to roll it out to their entire organization, that would represent a huge contract. That's all enterprise software. That's pretty much what they're going after at the end of the day. And if it takes a really long time, or it's difficult to actually do that, you have to have like a strategy to go into the long tail guys or maybe corporate counsels, or it makes it difficult to create revenue momentum, to get logos on the page. And I think in my opinion, likely what it comes down to is all the way back to the fee structure of the industry. If you look at call it an oil and gas company, if you can sell them a technology that can help them better identify what oil fields to drill, and so they drill more oil that year, they're making that much more money. So the value prop is just so stark, it's clear that adopting technology is a competitive advantage. The question becomes, in my mind, is if your law firm, is your incentive really to move faster? I don't know. I'm not saying anyone has bad incentives, but at the end of the day, it's like trying to sell into consulting firms or systems integrators. I think that's, if I had to be honest, what it kind of comes down to. In addition to the way sometimes the partner structure is set up, a lot of decisions by committee, that sort of thing.
Lorene, you have a legal background and you're also an investor. What's your take on, is this an opportunity that people have been slow to pick up on, and why?
Yeah, I think it's an opportunity people have been slow to pick up on, but the ABA Journal published an article in 2014, and there's a trend of people who are angel investors or investors who are former lawyers who see this opportunity because they get the challenges in the legal industry. It's a very highly regulated industry. Basically, you can't own a law firm, and you can't own a law firm or be an investor in a law firm unless you're an attorney. So that's a huge regulatory hurdle, and it's set up that way. Lawyers don't want, it's a guild, they don't want certain people coming in, and they want to protect that. I think there's two types of customers for legal tech companies. Definitely law firms. I think law firms are slow to adopt certain technology. I think there are law firms that are doing that and are being more innovative than others. But I see a huge opportunity for in-house counsel. They're under increasing pressure, a shifting in corporate culture where they want, they have to justify their existence. They're a cost center. Legal department's a cost center. So if they can save money in their department, that's something that's very important for them. You can see the trends are showing that in-house counsel departments, law departments are growing larger, and that's affecting law firms, outside counsel, because they're bringing that work in-house. So I think if you have a solution that can save the GC money, or a way that they can do practice law internally, some efficiencies and productivity increases that, it's a cost savings for them, and I think they would adopt it. You have, companies that have thousands of in-house counsel, so, I think that's a huge addressable market in addition to law firms, but I think law firms, it's just a longer sales cycle, but once you get a few, then the other ones will follow, and that's just kind of the nature of law firms. They kind of follow their competitors, but I think in-house counsel is a huge opportunity.
That's interesting, because what you're talking about sort of bypassing the law firms and going directly to our clients and making us obsolete. Not quite, but I wanted to ask Jules and Jake, because you decided to start companies in this business, and so did you fully understand the challenges and the customer base you were going to be dealing with, and why did you think it was a great opportunity?
If we did, we probably wouldn't have done it. I think sometimes I joke that we're masochists because this industry is difficult. It's a lot more difficult than other industries where tech companies are starting businesses. And just my personal view, I'm a non-lawyer. I was in Silicon Valley. I was working for digital media companies and clean tech companies and all the cool industries that were really fun. And then my poor co-founder, who I love and is an attorney, kept telling me how much the legal industry needed to change. I'd be like, yeah, but I'm doing this cool stuff over here, and started sucking me into it slowly. And the more I saw the pain points and what was going on in the legal industry, and the more I saw what I was doing, which was great but a little fluffy, that this industry really needs to change. And I am now the most passionate legal tech person ever, especially for a non-lawyer, because I think that the opportunity is enormous. It's harder, but because it's a hard problem, it's exactly why we need to start tackling these problems. And any entrepreneur who really wants to make change should be looking at legal tech.
I 100% agree. I mean, I came at this from a lawyer perspective. I was actually a very traditional lawyer, did the clerkship worked at the law firm, and I did not know everything I know now about the difficulties involved with selling to law firms or selling to solos. I did not know at the time when I started the company how hard starting this company would be. The immense challenges that would be involved in terms of building an enormous legal database, building the technology to make it searchable, hiring the engineers capable of doing that, and getting lawyers to participate in a community-like fashion of contributing, excellent annotations and advice and legal papers, all those things. Like Joel said, I was naively optimistic about all of it. I literally said when I started the company that I can build LexisNexis technology on myself in 3 weeks, which is what I told my Combinator, and I built something in 3 weeks. It was not all of LexisNexis. And so, as you might imagine, the first product was not very good. I don't think that, I guess I don't hold as bleak of a view about how hard it will be to build a real business in legal, because we know that there are at least a few examples of companies that have done this very well, right? There are very big companies that have done it very well, like obviously Thomson Reuters and LexisNexis have built enormous businesses selling legal information and research products. There are also examples of new companies or growing companies. I was talking to the ex-CEO of Practical Law Company earlier today, and they built a very big business. Clio, another good example of a company that's selling to small law firms and solos, has sold 30,000 subscriptions and makes over $20 million a year. And so it's none of this is impossible. It's going to be challenging, but I do think there are real opportunities here. And I guess part of the questions was why did I decide to start a company in legal? As a lawyer and as somebody who worked in it day in, day out, just like Jules said, I thought that there were some very fundamental things that had to change, and I felt very passionately about them beyond just a business sense. I mean, I very much believe in open information and open knowledge, and one of the reasons I started Casetext is I believe there is a lot of opportunity to apply some of the lessons that we've learned in other fields of knowledge to whether it be restaurant reviews like Yelp replacing Zagat or encyclopedias where Wikipedia replaced Britannica and Encarta. There are many opportunities to apply the same exact approach in a field where getting access to information is extremely critical. So I was passionate about it from day one, despite the business challenges.
So Vipin, have Jules and Jake convinced you that you're going to make your second investment now as opposed to your first?
Potentially, yeah. I mean,
Yeah.
So generally the way we work is we see a lot of different companies, a lot of different markets. We saw a lot of potential here because a lot of the spend was controlled by two major players, Thomson Reuters and LexisNexis. And we saw an amazing team, an amazing product, and we had to invest. And so, I mean, the number that you mentioned before, like 500 billion, that's huge. It's insane. We look at some markets that are, we're happy when it's like $50 billion, so that presents a lot of opportunity, and I'm sure that there's a lot of, different types of solutions that could make it in this market.
Right. Well, I want to follow up on one of the comments that was made about a challenge, which is the sales cycle and how it is slower, I gather largely because of the glacial pace at which some of your potential customers move, that is law firms. But talk a little bit about how that model compares to sort of the Silicon Valley model of just worrying about user adoption and monetizing. You get your users, you get your customers, and then afterwards you figure out how to make money off of it. Is that a model that works at all in this space?
All right, I have some strong thoughts on this.
Okay,
As someone
go
who's
ahead.
been selling to the legal industry for many years now. At first, when we were selling, everyone said, lawyers are special snowflakes. You have to sell differently to lawyers. You can't do the same thing. I worked at Salesforce. You can't sell like that. And so we initially tried to sell differently to lawyers, and then that wasn't really working. And then we just started selling the same way everyone else is doing it, and it still works. It's just a little bit longer. So the sales cycle is incredibly long. You just have to stick with it. And the thing I find as it's related to investment is that the problem fundamentally, and I think why more investors haven't invested in legal tech, is that the time horizon expected for traction from an investor after their first investment is 12 to 18 months. And the amount of traction you can get in legal, especially selling to larger firms and larger enterprises, is a little bit longer than that. We are still closing deals that we started 2 years ago. Our sales cycle was 12 months on average. We've gotten it down to about 4, but that's after 4 years of doing this and an incredible roster of clients. That, for any startup, is incredibly difficult. And for any investor looking at startups, that's also incredibly difficult to stomach in the typical VC. I think more VCs, if they understand legal tech and have different time horizon expectations, it could work a little bit better. But right now, I think there's a little bit of misalignment.
Jake, do you have the same sort of sales cycle in terms of that?
Well, actually, I
lengthy
mean, you
process?
mentioned the Silicon Valley approach
Yeah.
to getting users and getting people to love your product first and monetizing later. And we are, I guess, betting the company on that working. So,
okay, we've got two.
Yeah, exactly. I grew up in Silicon Valley. My dad started an internet company. I lived it, both physically and also just kind of been there with a lot of companies. And I've seen how that model really works well in other industries, whether it be enterprise or consumer. And I do believe, especially if you're building a product that is like ours, that on day one of release, if you do choose to release it early, and I have lots of thoughts on when to release a product, it's not going to directly compete or even be something that people will want to use exclusively, and won't be there for a number of years. And there are, I think that trying to sell it without people actually trying to use it first will make your life quite difficult. And so we've taken an approach where we've made all of the law free, where we've made all of the annotations of the law free, and those things will be free forever. And it's the initial product that we started with. And we're now at a point where we have 500,000 people using us every single month. And when we look, as we soon will, to monetizing, we have a very large roster of people at big law firms, small law firms, who use the site literally every day for 45 minutes or more. And that's the group of people that we think will be the most likely to buy our upgraded services. And we'll find out in a year or two whether or not I'm on this panel again. But I feel good about our chances to monetize, because we already have people who really love the product that they're using, have given us a lot of feedback, and they've grown with the product, who have beta tested our premium features and are already said they're willing to buy it. And that is a much better, I think, a safer place to start. But it took one thing about, this panel's about investing. It took one thing that I think is actually very hard to get, which is investors who understand, the market well enough to understand why we're taking this approach. It is no coincidence that the majority of the people who invested in our company are ex-lawyers or people who sold legal software. Even Union Square Ventures, the guys who led our Series A, we picked them over the other investors we were looking at because of the 5 partners, 2 were ex-lawyers, and the one who joined our board was a Davis Polk partner for over 20 years. And they understand the long view that we're taking and the opportunity here and why things might take a little bit longer, both during the sales cycle, but also to build up the initial kind of traction to get to where we're getting. And that's why, we fundamentally picked them because we believe they understand exactly what we're doing, and they're on the same page with us in terms of strategy. And it can be really hard if you have investors who expect, like Jules said, expect different things, or expect you to look exactly like the kinds of companies that sell to, say, other Silicon Valley companies, of which there's a lot in Silicon Valley. It's so easy to sell your API to some other company that also produces APIs. And I think it's almost skewed expectations. My personal opinion, by the way, is a lot of those businesses that get a lot of traction really early among hardcore nerds. Some of them grow to be very big businesses, but some of them hit a ceiling very fast. And for those investors in the audience, I would argue that there are some businesses that might take a much longer time to build, but that inevitably can become much bigger businesses, and that including in legal tech. And I think you should take a close look at those companies.
So we should hear from our investors, it's great because we've got really early stage, later stage, and I'm not quite sure where you fit, Vipin, but talk.
So,
talk about the.
For me, it's like this is like an enterprise sales model, though. Mm-hmm. 'Cause you have to open source your content, your platform, in order to drive traction, right? That's an enterprise sales model.
Yeah.
We're starting to see the same sorts of things with Ravel, where they're targeting, smaller sized law firms, mid-market law firms to drive that traction. And so, that's just like a large enterprise company that wants to sell to like a Microsoft, wants to sell to like a Bank of America. It's just like them selling to the new and hip startups in the space, like, Series A, B backed startups. So I'm curious your thoughts too. Like, don't you think that there's a lot of like enterprise elements in like legal tech?
Yeah, well, that's what it is. It's enterprise sales. I wasn't saying that the model was different or the approach should be different. I was just saying the sales cycles tend to be longer. It's harder. And just to be clear, that doesn't mean I'm totally pessimistic on this market or I don't think it won't be disrupted. It just means that it's harder.
So Nick, when do you think you haven't made an investment yet, but if you were looking at, when do you think you would invest into a legal company in a Series A round? What kind of revenues would you be looking at?
So, yeah, I guess, so I'll speak to that, but I guess the first thing is, so at Bowery, we only invest in about 8 new companies a year, so I just want to make it clear, because we haven't invested in a legal company, that shouldn't be you shouldn't take that as a reflection that we hate legal tech. It's just
You wouldn't be here if you did.
right.
All about
So
the action then.
sorry.
A lot of talk, action.
That's fair. So basically, most of our initial checks are actually at what most people would call the seed stage today. So most rounds we invest in are kind of the first round of institutional capital, about $1 to $3 million. That's 5 years ago the definition was totally different. It kind of moves with the market, but that's where we're investing, looking to get about 10% ownership. So at that stage, usually the company has raised, $500K, maybe up to $1 million from friends and family or accelerators or angels, what have you. Usually there's a product that is built that's usually more than just a prototype, has been used in some way by customers, even if pricing isn't solidified, even if the full go-to-market or sales plan isn't in place. So that's kind of what we look for, really, to be honest, more than revenue. Most of the companies we're investing in, their stage is such that they may have some revenue coming in, but that's not a good benchmark.
Yeah, we don't look at numbers either.
You don't.
You got to have an amazing product and market potential.
Lorene, you bring a really early stage investor as an angel. What sort of model resonates with you, and what are you looking for in terms of sort of the benchmarks before you make an investment?
Even though I'm an angel, I'm looking for the same type of thing. It's not going to be a prototype is built, and in some cases, all the companies I've invested have had customers. So it's not just the idea phase, and they're not in the proof of concept. The proof of concept has already been done, and they're on the market. So that's really important for me. And the two companies in the legal tech space, they were at that point. And I just saw the potential for the market, and I understood it. I think angel investors, the time horizon, different from VCs. I don't expect to have a return for at least 5 years or so. So it's a little different. But for me, the important thing is, I think for legal tech is just I understand the market and the trends that are going on in the marketplace. So a company, I see that things that are going on, and again, the law firm there was a potential customer as well as in-house counsel, and I think in-house counsel is really big. And you mentioned, banks in some cases, some of the banks, particularly all the financial litigation that's happened the past few years, they have spent billions of dollars in legal spend. So if you have a product and service, if they're already spending $1 billion and you're figuring out a way to make that legal department efficient and productive, it's a drop in the bucket for them.
Mm-hmm.
So
Right. Well, we've mentioned a couple of adjacent or other industries that are really being disrupted by technology. Fintech, and I wonder if you see the legal market as being capable of being totally disrupted, or is it more helping it evolve, or more likely just pushing it or pulling it, kicking and screaming into some future different business model? How do you see this? Is it going to be a big bang, or is it going to be a slow evolution to really change my industry?
So, first of all, I think AI is going to change a lot of things over the next 10 years. It's scary, and it's also, it could be a bright horizon for all of us. But that being said, I don't think the entire legal industry will ever get disrupted. I think that lawyers are always, a necessary component to sort of, fight justice and be the good in the world, fight for the good in the world. But that being said, I do think that certain parts of the legal stack could be disrupted, like legal research could be disrupted. The discovery market, I think Everlaw is trying to be the one player in that market. So yeah, in general, not the entire market can't get disrupted, but certain parts of it could.
Yeah. Jules, so what about the Uberization of law and the gig economy?
I have strong opinions on this as well, which is
Yeah.
I actually think that Everlaw and all the legal research tools out there aren't disrupting anything. They're just making a slightly better version of the thing that already exists. In order to have true disruption, it would have to be radically different from what currently exists, and I do not see that happening in the legal industry at all. I see the slow evolution. The reason we called this evolve law instead of disrupt law is because it is slow incremental change, and it's change that can happen fast-ish, but it's not going to totally blow everything up and rebuild like happens in other industries. And I'll give you a personal example from Hire and Esquire, which is that when we went out, we started pitching Hire and Esquire as we are like a robot. We're, a recruiting robot, and we're doing all this cool stuff, and we have lots of data, and we had a whole pitch around how tech focused it was. And that got a lot of nothing, and people were scared of it. They weren't comfortable with it. It sounded too crazy, too new. So we go in now and we say, we're just like your legal staffing firm that you already are familiar with and spending a ton of money on, but we're just better, faster, cheaper. And by the way, we're a Trojan horse. We're not going to tell you. We're going to sneak in all this other stuff that you're not aware of and that you probably would be scared of if I told you what it was. But when you're using it, you're going to like it. And that's seems to be what works, at least right now. So I think the incremental change is what's going to work in this space.
Let's, before we open it up for questions, let's talk about exit options. So I think this is still a relatively new phenomenon in industry, the legal tech industry. So I don't know that there have been that many big exits yet. There have been some, but for the investors, where do you see the exits coming? Strategic buyers? Anything else?
I mean, I think legal tech is no different from any startup. I mean, basically there's two exits. You either IPO or you're acquired.
Right.
So, and the two big players are LexisNexis and Thomson Reuters. And they're the ones who've been making a lot of these acquisitions in the space. So, maybe there'll be some new players that come out, not just Thomson Reuters and LexisNexis. Hopefully maybe there'll be some other companies that see legal as being this big industry and will enter that market. But I think most of it will be strategic acquisitions.
What about a private equity building a platform? I mean, you can sort of envision, I don't know that there are any doing that, but a private equity firm starting with a company and then acquiring others and really building out something that's big.
There are some.
So who
Mitratech, it's private equity owned.
so what do you,
Not big enough to move the needle.
So the biggest example moving it right now is Great North Partners bought Intap. Intap has been basically doing a roll up.
yeah.
They own they own majority share. They're rolling it up. Aderant moved 3 times between VC. It is now in a public holding company. Those guys did really well, since I know what their valuations were along the way. So there's several different
clearly an option.
things, and
Yeah.
if you go back, Solution 6, which
Yeah.
was Aderant, blew up at about 30 million, and it sold about, I think it sold out 120, now at 123 million in revenue. So they did a roll up of several different legal tech companies.
So there are exit
Yeah,
options
there's-
besides Thomson Reuters and Lexis.
Yes.
Just clarifying. For all the investors in the
Yeah.
room, we get a lot of shit for
Yeah.
that. There are other options, and there will be more options.
To be clear, though, like-
Steelbrick.
Good. Well, I think the point is that there are options other than LexisNexis and Thomson Reuters.
See, I don't think that's clear, to be honest with you.
Oh, okay, good.
If you can build a big enough business to IPO,
Yeah.
that's fantastic. Then do that, please. But if, like on the acquisition side of things, I really don't. So PE shops, they're looking for deals, right? That's they're looking for under the radar companies, poorly run family owned companies that they can do something to, whether it's financial engineering or operational engineering, to turn a 2 to 4x on the company. So they're not going to turn around and invest in one of our companies at the 10 to 20x multiple buy one of our companies at 10 to 20x multiple that we really want. So that's not really an option in the traditional sense. It's a downside. It's a way to mitigate downside maybe. But that's not really what we're shooting for as investors. I'm not saying that's a bad exit, because not every great business needs venture funding. But that's just our perspective. So, when I look at historically, LexisNexis and Thomson Reuters have bought almost all companies in the space. I was literally looking for some before this, and the only one I could find was Total Attorneys, which was a relatively small company. So yeah, I mean, now that doesn't mean there couldn't be other potential buyers, but the question, I have to raise a question of who would it be?
There was an IPO last year, right? Appfolio. So I mean, there's a promise here.
And the other thing is also just quickly that a lot of the legal tech companies are in the business of helping lawyers practice the law, but there are a lot of, it's diversifying now. So for us, we're an on-demand economy play, and we're a vertical marketplace. And that is not necessarily something that needs to be acquired by a legal company. It can be a vertical play on something that already exists in the on-demand economy.
You had a comment, and then we're going to move to
So
some
also
questions.
comments. To the Mitra Tech point, I think it's important to note that there was a shift on the board in September, so it went from Vista Partners to TA Associates. TA Associates has a great deal more revenue, much more focused on growth than the operational side, number one. Number two, wasn't it last week that HiQ just got something like $50 million, and Goldman Sachs was a part of that? I mean, these are, I think, relevant talking points to you. I'm sorry, I don't know your name,
Nick.
There, but I'm speaking to your point, which is that this is unknown. There are other options other than Thomson Reuters and Lexis or Wolters Kluwer or whatever, like fill in the blanks, and they're currently happening. They're just not communicated well.
Well, good news for the room. Let's actually, rather than sharing examples of that, I think we get the point that there are some options out there, and this is a growing market. Why don't we take some questions? I have one closing question from the panel, but I'll hold off on that and take questions from the audience. Yes, please.
My name is Ed, and I work at Thomson Reuters.
Welcome.
This is weird. I'm not going to buy all of you guys.
Did you bring a checkbook?
You're going to be a
Colleagues
popular
also-
man.
I don't think it's weird at all.
Yeah, that's,
You made one of these quickly.
yeah, I got to go
It's
actually
gonna be a
right away.
stampede.
And I also write for Above the Law, covering kind of this space, so it's been really interesting. My question is, taking conventional wisdom when it comes to sort of funding, as well as for startups who are trying to make a business case, how do you approach sizing the opportunity and in your business case when you try to think about the market? You had mentioned it's just about a great idea, and also is there a market? And it's kind of like, is there a market seems to be answered by like, lawyers want to advance the ball. And that's great, and that's sort of like a nice sort of emotional narrative. But I wonder, like, how do you determine sort of with a long sales cycle, when there's long kind of there's a time horizon for revenue? How do you size the market opportunity when you're looking at potential investment or when you're pitching your business case to a potential investor?
So I mean, just to start, like you can take a look at spend today. So how much are law firms spending with Thomson Reuters for legal research, right? Like that. I mean, it's a huge number. It's in like the tens of billions.
Or something.
Something like that. Yeah. You can maybe be honest about it. Yeah, no, so that's kind of how we take a look at that from that angle. And then we start taking a look at, who are their current customers today that are actually spending with them. So we do like a bottoms up and top down sort of analysis.
Anyone?
The only thing I would add is, if you think about today, what's a reasonable contract value that you can seek to get from certain types of customers? And then you think about how quickly can you sell how many contracts? Because in order to grow a business, you either got to sell more contracts or you got to grow your ACV, or hopefully you're doing both. And you can grow your ACV by selling into bigger companies over time or by expanding your product portfolio. So I 100% agree with Vipin. I just say, at least for us, we typically like to think about it in that light and then compare it to the entrepreneur's understanding of how they need, what resources they need to do that. Like, do you need inside salespeople? Do you need seasoned people who have, account execs who have sold legal software before? Is it going to be a total bottoms up thing? You're just going to, pound the pavement with email marketing, so that's all I'd add.
And there aren't good numbers. And I think part of it is because VCs aren't investing in this. Usually they'll have associates or teams of people researching markets to find out where the opportunity is. That hasn't really happened in legal. So if Thomson Reuters would like to volunteer to research the legal market and tell us where the opportunity is, that would be awesome.
I guess the question was really more for like sort of net new businesses with net new markets, right? Like when you're talking about legal research or legal staffing or some things that are in existence, there are some numbers out there. But when you talk about like a Ravel, legal analytics, where it's kind of like, well, who's buying this now? Almost nobody. And so sizing the market, and I don't have a Silicon Valley background, so I don't know. I mean, maybe you guys have a method for this, but that was kind of a question, you know, around new markets.
Yeah. No. So I mean, Ravel is doing something that's very, I would consider like disruptive. They're partnering with Harvard to digitize their entire law library. That's probably definitely one of the largest pieces of kind of just U.S. case law in the world. And so from there, you know, we see a lot of potential with them taking that to the next level.
Any other questions? In the back there?
So I think we've heard a lot about evolving or innovating for lawyers in particular and firms. But what about evolving or innovating on the customer experience, the client experience? Especially since it seems like the lawyers would follow the clients if they move to new experiences. So I just wanted to see if you're looking at stuff like that and how you think about that.
So I mean, just to kick off, the consumerization of IT, that's what we call it. That's huge. You know, things like Tinder swipes are making its way into enterprise software, and so you know it makes it easy to consume. Like you know, the smartphone has changed everything that the way we interact with information and technology. The smartphone has changed that. So like the news feed, even we invested in a company called Metric Insights that basically creates a news feed for everything happening in your organization that is relevant, important to you, and is actionable. And so we are actively looking at ways where, you know, that trend gets into different pieces of software.
Okay. Back there? Yeah.
Hi, I'm a very technical person, and I feel like all the people here in the room are very fast forward and thinking about technology. Maybe this is my bias, but is the adoption very slow in this industry because lawyers are not very technical and probably stay away from technology? And how do you look at that when you try to build a technology to improve their life and they're not really interested in using anything because they think nothing is broken?
I think one thing that I don't want to make it sound like you're doing this, but it's actually really easy. And we've done it a few times tonight already. Like say like all lawyers are X, all lawyers are Y. What I found is that some lawyers are afraid of some technologies, but not others. And so like there's some lawyers are gonna be like super, like give me all the technology I can get. That in my experience has not been every lawyer, but some lawyers. Some lawyers, I think the majority of lawyers like certain technologies and don't like other technologies. And if you provide them with a really excellent experience, if you treat the products that they use the same that they might go home every night using Uber, but not find the technology they're using during practice to be anywhere near as easy to use, right? Or they might use Tinder to find a date. You know, most people, even very old lawyers, use a lot of technology, and I do not think it's a fear of technology that's driving anything, and I also don't think that it's easy to categorize all lawyers into one bucket or another.
But is it only that they're using email and nothing else?
Not even at least in my experience. I worked with some old partners who taught me things I did not know about websites and the internet, and I grew up in Silicon Valley coding, right? And it's actually really easy to look from the outside at some 75-year-old. Even the judge that I clerked for, weird fact, he loves cats, and showed me a bunch of memes, right? And so he may have handwritten his opinions, may have dictated them to his secretary, but at the same time he was on ican'thascheeseburger.com. So I think and of course he also used a lot of technology in his real job. But the point is people generally speaking, and lawyers too, are very diverse in their technology interests and aptitudes, and will generally, if they find something they really like, regardless of how technophobic they may seem, if it really helps them do what they want to do or helps them be more effective or get more information or alleviate a problem, they're more likely than not going to use it.
Yeah, I would agree and say that it's not necessarily aversive to technology, and it's an aversive to change. And I find that actually to actually stereotype and generalize, lawyers actually think very similarly to engineers. There's kind of decision tree analytics. It's if this, then that, and it's not the technology that's scary. It's the, oh, I need to do something differently. Lawyers tend to be, if you look at the data that's out there, on the 90th percentile in skepticism. They're waiting until other people are proving that something works before they take the dive. I call this the penguin effect that you were talking about. They wait till the first penguin jumps in the water, and then all the other penguins jump in the water, which sounds nicer than lemmings. And so just, it's not the tech, it's the change.
So I think we should do a lightning round and then close. So I'd like, because I know we've got a Darwin talk coming up. So to end, because there are a lot of people out in the audience who are interested in this, if each of you could very briefly give your top tip for legal tech companies in their money raising efforts. What's the thing they need to remember when they're out there raising money? Why don't we start with you, Jake?
Sure. I would say, and this may sound super obvious, but it'd be know your business. That is, you may not even need to or want to raise money for the kind of business you're building. What we were building, we knew pretty early on that, just like to start certain companies, you need to buy a factory, we needed to buy data and a lot of engineering and a lot of time and marketing to build it up. And we knew that would be an aspect of our business. Don't make fundraising an end in itself, but if you know your business and know that might be a component that you need, being able to pitch investors as to why that money will turn into more money for them later becomes a lot easier.
I would say raise money by selling. Revenue is non-dilutive. It's the most awesome type of investment ever. So do that first, and then, by the way, it's also easier to raise money when you have more revenue.
Go big or go home. We look at big markets. We look at companies that have big potential. Make sure that you're, trying to change a big part of legal tech.
I'd say, in an industry like this, have a very defined argument for how you're actually increasing the pie for lawyers or law firms. I didn't get a chance to follow up on that last question, but I honestly think it's not because the challenges aren't because people are, technophobes or Luddites in law firms. The same challenges exist selling into investment banks outside of trading, consultancies, agencies, and it's all because it comes back to this model of what are you doing for me? Are you increasing my bottom line? And so just think about the business model of this industry. It could be that you're being very disruptive and you're forcing them to change, or it could be that you're helping them, be more efficient with their time and hence have less cost. But just think about it at the end of the day, that's what is going to drive sales, for you. So have an argument for why it's, transformative.
My advice.
Last word.
I have the last word. When you're fundraising, I think because legal tech, for all the reasons we talked about earlier, I think you need to know your investor. You should target people who know the space, former lawyers, just people who understand that this is a long-term play. The sales cycle is a lot longer. So in your fundraising, definitely target those types of investors who get it.
Great. Well, thank you all. Wonderful panel, and they'll be around till
Okay, so thank you very much, Lynn. And we do have really cool Evolve Law t-shirts that we will be giving our panelists, but it's retroactive. We will bring them next time. So now I'd like to introduce, they're not quite done yet. So I'd like to introduce our Darwin talk. And a Darwin talk in a nutshell, because I know some of you obviously have to go. A Darwin talk is thought-provoking. It's a little bit edgy. And tonight's Darwin Talk, our theme of our panel has been investment in legal technology. And our Darwin Talk is going to be given by Alma Assay from Allegory Law. And she's going to talk about why legal tech companies should not take any VC money. So here we go.
Thank you. So a couple weeks ago, I was talking to the folks from Involve Law, and they invited me to do this Darwin talk. And I think it's because last fall I had a chat with Jules, and she knows my background in terms of trying to raise money. So I'll go through these points, why legal tech companies shouldn't and don't need to raise money from VCs. And, I'll start by saying my company has raised money, but we've managed to make it as far as we have on less than $1 million, $995,000, but still less than $1 million. But it's all individual investors. So I have 6 points here. The first is pretty obvious. I think you all know it. And they talked about it a little bit. Investors are looking, or professional investors are looking for quick returns. That doesn't really work in the legal industry. It's a slow sales cycle. It's really painful to sit in meetings with professional investors, and they're like looking for the hockey stick within a year, and they're talking about, well, isn't there a slow sales cycle? What about this? Don't lawyers have trouble signing on? Yeah. You're just sitting there like, yep, it's true, and you can try to convince them all you want that, yeah, but if you stick with it and you keep going, 5 years down the line, they really are going to jump on board. And Jules mentioned the penguins, and it really is true that once you get lawyers addicted to something, they will stick with it. That fear of change can be beneficial if you get in with them, and then they're not going to switch to another company. They're not going to switch to another product, but it does take time. The second is that fundraising steals time away from us, and this can apply to any startup. It's not specific to legal tech, but I spent a lot of time trying to raise money. I spent 7 months living in Silicon Valley thinking I'm going to go do the Silicon Valley thing. I'm going to raise money. And in the end, all the investors are saying, well, why don't you have more traction? Why haven't you raised more money? And I'm sitting there thinking, well, because I've spent all my time reworking my pitch deck 20 different ways to appeal to 20 different kinds of investors. And I finally thought, well, in this case, either I have to go focus on the clients and just try to build revenue, or I spend all my time trying to raise money and I'm going to fall flat on my face because they're right. I have no revenue. I'm not spending any time actually trying to build clients. The third point is flexibility to try new things. I think particularly in legal services, you got to keep trying new things until you figure out what sticks. In my company, we built software, and I was an attorney at Gibson Dunn. I thought, I'll go build my dream come true software. It'll sell itself, right? Because that's how it works. Not how it works. I built this really cool software with the help of some amazing engineers, and I discovered what really would sell it is providing the services behind the software. It's really hard to convince clients to sign on to a software on day one in a case when they could drop a complaint into a folder, and they're like, well, why do I need to learn a new tool? But if you come in midway through the case when they're prepping for depositions, summary judgment, trial, and they're drowning in paper, and you say, I'm going to turn that case over into our tool. We're going to make it totally organized, and you're just going to sign on to the tool, and there's your case. So it's basically, you think about a tool like Westlaw, all the content's there. So they were signing on to my software, and it was just a blank dashboard. And we're like, no, we'll fill it up. We'll fill it up with your case. When you try it, it'll be meaningful. And that's what really was the turning point in our business. But that took a lot of tries coming up with, okay, well, let's try this to get it out there. Let's try that. And I'm not sure with professional investors that we would have had the flexibility to try these new things and see how it worked out. And along with that is forced timelines. They think you can hit a certain point by here. You have lawyers who are like really excited to try your new product. Then you have lit support people in bureaucracy who are like, well, you have to fill out this form and you have to fill out that form. You have to do a security review. And there are a lot of steps. Even if you have that enthusiasm and you're sure you're going to get that client, there are a lot of steps in between to actually lock it down. The fourth point, of course, is that equity takes away your stake in the company. So it dilutes you. And I think especially for us lawyers who are going out and starting a legal tech company, frankly, we were making a lot of money. And so the idea of getting diluted down to the point where you have to sell your company for a lot more if you ever want to get that return, for someone who didn't have that income before, a number that seems like a lot of money might not seem like a lot for us after having spent 5 to 10 years working on a business. So when you take on that extra investment, you are diluting yourself down, and it seems like an obvious point, but I came to realize that it's particularly salient for us who sit there and do the numbers and think, well, yeah, I've had a different kind of life and I'm glad I did this, but at the end of the day, I could have made that money in 2 years just sticking at a law firm versus however many years doing this. The fifth point is, having a life. And again, this doesn't just have to be legal tech. So I lived in New York for 12 years, and to get a little personal for a second, I met someone in West Virginia and fell in love, and now spend most of my time there when I have free time. And I know every day that that's something that I would not have been able to do if I had VC investors. They would have been like, wait, what? No, you have to be in New York, you have to be in California, you have to be in DC, and the only people that really matter to me are my employees. And if they're game and they support me and know that I do better work when I'm happy and have a life that's fulfilling for me, then that's what I want to do. And, it has occurred to me in retrospect that if I had taken VC investment, I would have missed that opportunity and would still be in New York and probably not enjoying my life as much. Thank you, Jules. The last point is that there's really no need. I think something that is very unique about legal tech entrepreneurs is that people with money. So that partner down the hall that you used to work with might not be, Ben Horowitz, but he has money. And, $10,000 here, $10,000 there. I have lawyers who have invested up to $100,000 in my company, and, they didn't really think much of the money, but I did have to go to them. They're not people who are out there looking for investment opportunities, but when they heard that I was doing something new and said, hey, do you want to grab a drink? I said, yeah. And I told them what I was doing, and I was enthusiastic about it. And they invested in me because they believed in me. And I think we're fortunate that we know a lot of people who do have money. It's not like someone straight out of college who may not have that network. We have the opportunity to go to people and collect the people around us and ask them to believe in us and invest in us. You can also spend that money wisely. I think legal tech entrepreneurs tend to be a little bit older, have arranged their lives, have, dealt with their own financials, and have the ability to budget things and be wise about how they spend the money that they do raise. And we also have an opportunity that I didn't understand until I blew it. I was out in Silicon Valley. I was up to my eyeballs in credit card debt. I'd never in my life received a notice saying, hey, do you want to rebuild your credit? And it suddenly occurred to me, well, maybe I can get a small business loan. And nobody would give me that small business loan because at that point, I had no money. And I thought if I had it to do over again, when I was still working at the law firm, when I still had good credit and on paper, I looked like a good credit opportunity, I should have gone out there. I should have gotten more credit cards. I should have gotten loans. No, but I'm serious. There's so many opportunities available to you that you don't realize when you're a professional because you take it for granted. You look at those credit card offers as junk mail, and they really are true opportunities. And I was talking to Chris from Hotshot earlier because when I met him and Ian 2 years ago when they were just starting out, I sent them a long email saying, here are all the things that I wish I'd done when I was just leaving my job, when everybody thought that, I was going to be at a law firm for the rest of my life. Here are all the ways that I could have gotten even interest-free money just sitting there available for me. And by the time I thought I needed it and went to ask, they're like, are you kidding me? So I think that is a true opportunity, particularly for lawyers who are going into this space, to really leverage that stability that they've had to build up kind of a nest egg before they jump off the cliff. So those are the 6 reasons that I came up with. Thank you.
Okay, so we're just going to wrap this up, but just a couple of announcements. Thank you to Michelle Matera from Davis Wright Tremaine. She's probably outside still running around. She did all the logistics. She handled all of you who registered at the last minute. Not to call people out, but you would have a handwritten. No, I'm just kidding. So thank you to Michelle. Thank you to Lynn and all the Davis Wright Tremaine people for hosting us. We are having a really cool event in Chicago. It's a pre-ABA tech show event, so it's the Tuesday, March 15th, and it's the 30th anniversary of the Legal Tech Show. So we're trying to get 30 legal tech innovators, members or not members of Evolve Law, and we're going to do a panel on the next big thing in legal tech. So we'll have some fun predictions. And then we're going to do a startup pitch with some of the startups that are legal tech startups in Chicago. And then, of course, we'll have a fun Darwin talk. There's also an Access to Justice hackathon the weekend before. So we're going to have some of those folks come and do a Darwin talk. And so now our companies have some of their demo tables out there. So don't just run away. Just stop at least at one table. And thank you all for coming.